Something very interesting is happening in crypto right now. Bitcoin hasn't really moved. XRP hasn't really moved. In Ethereum, well, it's hardly moved at all. Volume has been low. Volatility has been low. And prices have been stuck inside a tight range since Friday. Now, at first glance, that might look boring, but there's a reason for it. The United States has been on a bank holiday period, and today that ends. So the real question becomes this: when US liquidity comes back online, do we finally see a price reaction, or does nothing change? Let's break this down properly.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
As I'm recording this, we've basically been ranging since Friday afternoon. Let me show you what I mean. Here's Bitcoin on the 1 hour time frame. We've had a dump, we've had a bounce, and then we've just been grinding sideways. No expansion, no continuation, and no aggressive trend. Just chop. Now look at XRP. It's exactly the same thing. Impulse, pullback, then tight sideways movement. And this is classic low liquidity behavior. Markets don't expand when participation is low. They drift, they range, and then they compress. And compressed markets don't stay compressed forever. Now, I know what some people are likely to say. Matty, crypto trades 24/7. Why does a US bank holiday even matter? And that's a great question. Yes, crypto trades 24 hours a day, but liquidity does not operate equally 24 hours a day. When US markets are open, ETF flows matter, institutional desks are active, hedge funds adjust exposure, and risk assets move together. When US markets are closed, large participants step back, volume drops, and volatility compresses. And that is exactly what we've just seen. Low conviction, low aggression, low expansion. This isn't manipulation. This isn't a conspiracy. It's just the dynamics of participation. So now we're going to move on to the more interesting part. US markets reopen later today, but what does that mean? It means more volume, more positioning, more reaction to the macro, and more ETF flow influence. It doesn't guarantee direction, but it increases probability of movement. Right now, we're in a coiled up spring phase. And when liquidity increases, springs tend to release. Now, here's where it gets even more interesting for me. The fear and greed index is still sitting in deep, extreme fear. Retail sentiment is low. Confidence is low. Buying aggression is low. People are scared. They're waiting. They want confirmation. They want safety. And they want guarantees. I've been in crypto since 2013. I've lived through the 2013 blow off top, the 2017 mania, the 2018 crash, the 2020 COVID collapse, the 2021 euphoria, and the 2022 bear market. When the fear and greed index is deep in extreme fear, retail behavior changes. People stop buying dips. People stop talking about crypto. People stop posting gains. YouTubers start to become quiet, and Twitter becomes negative. Everybody is waiting for someone else to go first. But here's the problem. By the time retail feels safe, price has probably already moved. There are 3 possible outcomes today, so let's be logical and structured about this. Scenario 1 is liquidity returns and there's a breakout. US markets reopen, ETF flows resume, and institutions start repositioning. We're probably then going to break this sideways range to the upside. Shorts will get squeezed, momentum traders pile in, and volatility expands. That could be the spark that retail is waiting for. It's not guaranteed, but it is possible. Scenario 2 is liquidity returns and continued chop. Markets will reopen, volume increases slightly, but there's no catalyst. So then we would just continue grinding sideways. This is the emotional draining scenario because nothing dramatic happens, just slow, frustrating movements. This is the phase that will shake weak hands out. Then we've got scenario 3, which is liquidity returns, plus we have a downward spiral. This is the uncomfortable one, because if US markets reopen, and then equities are weak, and macro sentiment is cautious, crypto flows risk-off behavior. We will then break the range to the downside, meaning crypto could fall from here. And then the fears will deepen. Social media will go into meltdown. But here's the key. Extreme fear inside a large cycle often becomes long-term opportunity, but it feels worse right before the sentiment turns. Now, this is the part that's the most important for me, and it's what I'm doing. I'm in accumulation mode. I'm not trying to time the bottom. I'm not trying to catch the exact wick. I'm not pretending to know which scenario plays out today. Instead, I have daily auto buys set up on Bitcoin, XRP, and Ethereum every single day. No emotion, no guessing, no stress. And I'm comfortable doing that during extreme fear. When we get out of extreme fear and fear, I will stop doing that. But right now, when we're in extreme fear, that is exactly what I'm doing with my spot holdings. Now, let me explain something carefully. When I say this feels like a safe zone, I don't mean that price can't go lower. It absolutely can. Safe does not mean the lowest price. Safe means favorable, long-term probability. And that's the important part here. What I'm doing is playing the percentages. When the fear and greed index or the sentiment on social media is in extreme greed, risk is elevated. And when sentiment is extreme fear, risk reward improves. And here's the truth. I would much rather buy when people are scared than when people are celebrating on Twitter or TikTok or YouTube. The biggest mistake people make in crypto isn't buying too early. It's not buying at all. They wait, they hesitate, they analyze endlessly, they want confirmation, they want the news to feel positive. But by the time the news feels positive, the price has moved 20, 30%. I've seen this cycle so many times. The accumulation phase is boring and it's uncomfortable and it lacks excitement, but it's powerful. Right now, the market is waiting for something, a catalyst, a narrative shift, a liquidity event. That spark could be ETF flows increasing, a macro headline, a regulatory clarity, institutional buy-in, a short squeeze, a positive equity reaction. It could even be a war. And I know that sounds terrible, but it's the truth. These kind of geopolitical events have huge impacts on crypto. Something will shift the sentiment. Markets don't stay in fear forever. They oscillate, fear, then relief, then greed, then euphoria, and then it resets and the cycle repeats again. And if you're new to crypto, this phase probably feels scary. And if you've been here before, it's going to feel familiar. Sideways markets, low volume, extreme fear, and muted sentiment. And people, quite honestly, shitting themselves on TikTok. This isn't the exciting part of the cycle, but historically, this is where positions are built. Zoom out for a second. We are not at a euphoric highs. We are not in mainstream mania. Your taxi driver isn't talking about altcoins. Your barber isn't asking about a meme coin. We are in a hesitation mode. And hesitation phases do not last forever. So my strategy right now is simple. I'm accumulating slowly. You remove emotion. You accept short-term volatility and don't get scared by it. And you focus on long-term probability and you try to ignore the daily noise of negativity. That's it. No drama, no prediction, no hero trades, just discipline. If you're watching this and you feel nervous, that's probably normal. Extreme fear is uncomfortable by design, but discomfort and opportunity often overlaps. You don't need to go all in. You don't need to be reckless. You don't need to leverage trade. But understanding how cycles work changes everything. And that's exactly why I built the Crypto Liftoff course. It's completely free. It teaches you how market cycles actually work, what liquidity means, why fear phases repeat, how to avoid emotional decisions, and how to build conviction properly. If you're serious about crypto and you want clarity instead of panic, start there. There's a link in the description, or you can head over to cryptowolfpack.co.uk and click on the free course. It costs you absolutely nothing, but it can change how you see the markets forever. So today, the US markets reopen, liquidity returns, and we find out whether this sideways compression was just a pause or the calm before an expansion. Whatever happens, I'm sticking to the plan. I'm accumulating, I'm staying calm, I'm ignoring emotion, and I'm focusing on probability. Because fear phases do not last forever, but positions built during fear, they often matter the most. Let me know in the comments, what do you think is going to happen? Are we going to have a breakout, up, a breakdown, or more sideways chop? Thanks for making it all the way to the end of this video. I appreciate every single one of you. Please hit that like button, hit that subscribe button, and look below right now. If there's a button that says hype, press it. It's totally free to press and it'll give the channel an algorithm boost. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.